because everybody's dying to know about the summit and what they think is going to be announced.
We've got this foreign direct investment coming in. So where is that capital going to be put to use? And what is going to be the big unlock? My mental model for this particular cycle is the asset management that the companies are building on crypto land. So this is all of these people looking at tokenizing real world assets. I think that starts, the first wave of that starts. So I'm just thinking it's actually going to be broader than people imagine. And it's going to be more inclusive because we've now got this trade deal, the ETFs, because I think it's the same as the election cycle. They're all the same thing. So, if that continues to repeat, then it should go until 2026 when that should be a bear market year. But I am obviously very bullish. The 60% probability is we have kind of a very traditional cycle, and that pushes, Bitcoin up to the 100,000 to 200,000 range, and all the other assets accordingly where they are on the risk curve. There's a 20% chance this early start is signifying something much bigger.
The crypto world lies in anticipation after Donald Trump announced the crypto summit, slated for this Friday, March 7th. U.S. Commerce Secretary Howard Lutnick has confirmed that the Trump administration will unveil plans for a strategic Bitcoin reserve as well, as institutions and investors eagerly await. Today we'll hear the latest prediction from Real Vision CEO Raoul on Bitcoin, crypto, and where the market is headed in the coming weeks. Bitcoin is one that is headed for an unprecedented price milestone, and Raoul foresees a financial tidal wave that will catapult cryptocurrency to new highs. With the keen eye of a seasoned investor, Pal casts a spotlight on Bitcoin and the expansive cryptocurrency market, recognizing its significance against a backdrop of economic uncertainty. Bitcoin is sitting just above 91,500, still up over 6% just this week. Amid this fiscal tightrope walk, Powell discusses not only the economic indicators, but the absolutely parabolic surge in crypto prices we're about to see. The crypto summit will bring massive changes to the market, a seismic shift for Bitcoin and crypto. This isn't just speculation, it's a pattern Powell has seen before. As the momentum is building and the institutions are quietly positioning themselves, Raoul says everything is about to change. He says the next phase of the crypto cycle is critical, and he's stacking big bets in his portfolio right now. With the next bull market, and with crypto and technology being the biggest investments this year, Raoul says that he's remaining bullish on digital assets after significantly increasing his position size during the last bear market. The former Goldman Sachs executive gives a portfolio update on which crypto assets have the biggest upside in the coming months. With major pension funds and institutional investors on board for the coming cycle, Raoul predicts that crypto is on track to be a $10 trillion digital asset class. Let's get right into the interview as he gives his latest Bitcoin prediction and where we're headed in the coming months. Drop your comments down below and subscribe if you enjoy the content we do here.
Yeah, let me frame it for people in a way that people might understand it better. So I think many of us know by now that we're building some sort of digital network states. And we've been doing this over time, even over Facebook and all of the other social media. It's moving towards these online societies. And what crypto did was enable digital online societies to also have a system of money and accountability and finance and value transfer and all of this stuff, which is a new layer onto the internet. So we've created, and I've talked about this in the past, a parallel financial system. So let's call that crypto land. In the other world, which we can call fiat world, we have this massive but broken financial system, and people still having to seek returns, and returns have generally been subpar for many in that, and it's difficult to participate. So how does so this new economy, I think of it like an emerging economy, crypto land. So how do economies work? Economies work, GDP growth is driven by population growth, productivity growth, and debt growth. Those are the three components that make GDP grow. So when you go to the fiat world, we've got aging populations and in many countries shrinking. We've got low productivity that may get changed by AI and other stuff, but it's still yet to be proven. But the old population is less productive. And debt growth stopped essentially in 2008. And all new debt growth is really just servicing of old debts. When we go to this new emerging economy, we have population growing at 100% a year, which is the number of active wallets. if you think of it, it had a massive recession in crypto land in 2022, and the population grew 42%. So it's like, okay, this is an amazing thing. So obviously GDP growth is faster. Productivity growth keeps increasing. Things like smart contract was a new increase in productivity for crypto land. Let's say compressed NFTs, maybe what Solana's doing with Firedancer, maybe ZK proofs, all these things are productivity increases. And then debt growth, well, we've just wiped out the debt from the last cycle, so we're going to rebuild debt again this cycle, because that's what humans do. They love a bit of debt. So now what you've got is this new digital economy that's not easily accessible to everybody. Not everybody's got a passport to go there. And then you've got this fiat world. And what this ETF is a trade agreement that fiat world people can go and invest in crypto land without having to be a native. They don't need a wallet, they don't need to self-custody, they don't need any of this stuff that we all go through every day as part of our lives, because we're citizens over there, but they're not. But what they've got is a free trade agreement. So free trade agreements really are all about, where do I get my highest return on capital? So people want to do free trade agreements with India because it's a growing population, large economy. It's the same thing. Fiat world will be saying, well, am I going to get a higher rate of return over in crypto land? In which case, I'll put some of my money at work there. That's why this is important. It's not about a single event of, we're just going to bring RIAs in. It's something much bigger. It's bridging these worlds. And then as the money comes into crypto land, it then finds its way into the other states within crypto land, whether it's Bitcoin land or whether it's ETH land or Solana land or whatever it may be. And it gets reallocated on the risk curve. Some of those are smaller emerging states and some of them are more established. So when people think of it like that, it's just an emerging market that's opening up for people to be able to invest.
Raoul says it's the fastest pace of adoption of any investable asset in all of human history. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all. Raoul has been stressing to investors for months that all the factors are beginning to align right now. We are heading into the banana zone, a period characterized by parabolic moves upwards in crypto prices.
Again, we've got this foreign direct investment coming in. So where is that capital going to be put to use? And what is going to be the big unlock? My mental model for this particular cycle is the everything, everywhere, all at once cycle. Because if we think about it, $67 billion went into VC, into the space in 2020 and 2021. That money has been given out to founders who are building all sorts of applications and projects and everything else. Some of them will be infrastructure layer, some will be applications layer, and everything in between. And if you see the focus of where most of these teams are working on, it's kind of everywhere. So we're seeing the asset management that the fiat world companies are building on rails from crypto land. So, this is Franklin Templeton. This is all of these people looking at tokenizing real world assets. I think that starts, the first wave of that starts. Then we're seeing at the other far end of the spectrum is everybody's focused on gaming because there's a huge audience there. So somebody's going to crack gaming in some respects. And pretty much every protocol has got teams working on that. We've got in the middle, things like compressed NFTs and Solana, I think are a much bigger deal than people understand because I think it allows for ticketing. And ticketing is at scale consumer application of blockchain of which you don't need to know it's blockchain, which is what the space has been waiting for. We've seen some attempts at social media and other sides of that. Maybe we'll see more of that. The brands haven't stopped. So we're still seeing the luxury fashion brands in the NFT space. And I think we'll see a continuation of that. We've also seen the car companies, sports teams and others. So I think that continued space builds out as well. So I think it's more the applications of technologies than technologies. I think we've also got the identity idea that's, there's WorldCoin, there's a few people who've started in that space, and then using zero knowledge proofs, which came around in the last cycle, the applications layer from that. So I'm just thinking it's actually going to be broader than people imagine. And it's going to be more inclusive because we've now got this trade deal, the ETFs, because I think, we've got the Bitcoin one certainly coming and it's a pretty high chance we'll get the ETH one as well.
let's say, the next 6 months or so? How do you see the macro picture affecting the crypto markets?
Yep. So my crypto markets are forward-looking. So most people are saying, well, we're probably around a recession. We're seeing unemployment go up, blah, blah, blah. Crypto knew about this last year because it's forward-looking. It actually trades on liquidity conditions. And I do a lot of macroeconomic research at my research company, Global Macro Investor. And for us, the liquidity cycle just keeps going for the next 2 years. So we will see a bottoming of the economy, maybe Q1, Q2 of next year, that people will visibly start to see things improving, but the markets are already trading it. The equity market's already almost back at the all-time highs, crypto markets ripping because they're discounting this. If we live that 6 months in the future, are the Fed likely to be raising rates or cutting rates? Cutting rates. At worst, they don't do anything. But so the probability is for easing of liquidity conditions. Is there a chance, because we're going to an election year, that they stimulate with fiscal stimulus? Pretty much 100% chance they'd like to buy votes. So 2024 is all about stimulus and economic recovery. That's a very, very, very good backdrop. And that's the transition from crypto and macro spring into crypto macro summer. And that macro summer, crypto summer, is we're starting to see growth pick up, but inflation's not picking up yet. It's still falling from the lagging effects of the old cycle. So inflation is not a problem, growth is going up, and liquidity is coming into the system. That's like the perfect environment.
Powell's analysis brings attention to the liquidity cycle as a valuable indicator for understanding debasement, signifying a shift in the market's direction. He identifies a crucial turning point in June, where his weekly liquidity index hit its lowest mark. This prompted him to focus on purchasing Ethereum. Powell also acknowledges the divergence between liquidity and asset prices, emphasizing that during bull cycles driven by adoption and speculation, cryptocurrencies tend to outperform liquidity measures. Based on his findings, Raoul Pal strongly advocates for the strategic investment in cryptocurrencies, specifically highlighting Bitcoin and Ether as promising assets. He sees them as assets that surpass the performance of traditional financial institutions' balance sheets and provide a means of protection against currency debasement and the inherent flaws of the current financial system. What is your opinion on Raoul Pal's claim that investing in cryptocurrencies like Bitcoin and Ether serves as a smart hedge against currency debasement? Let us know in the comments below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.